Hi everyone, shout out with another video. Today I'm going to be talking about Nvidia, a company that I've watched for a really long time. Incredible business, the clear market leader in its space, absolutely insane optionality with potential use in so many sectors that have major long-term tailwinds, aside from its main focuses right now of gaming, computing and data centers. Fantastic company, one that I'm really keen to own. I'm going to talk about the financial metrics, the potential growth, do a DCF, talk about its most recent results, some news, and then what I think of the stock going forward. First things first, I want to look at the balance sheet. Cash set position is just okay here. Cash set ratio of 1.82, not unhealthy but quite poor for Nvidia's history, although it is much better than this time last year. Last year the company had around 11.5 billion in cash and 7.7 billion in debt in January 2021. Today, as of the most recent filing, it has $21.2 billion in cash on the balance sheet to 11 billion in debt. A great improvement there. Debt to EBITDA of 1.03 is again just okay. Fairly well covered debt with a good interest coverage. Allman score of 22.21 indicates this is not a company at immediate risk of financial default and is not in financial distress. So from that aspect, it's a relatively safe investment for the time being from based off these metrics. Overall, the balance sheet is decent. Great cash position. Debt rising over time, which is a slight concern, but they're spending really well for growth, as we'll talk about in a minute. Debt to equity, just okay. I think 7 out of 10 that they gave is probably a bit optimistic. I would give it a 5 or a 6. Profitability-wise, this company is an absolute beast, and this is why it can kind of get away with not an insane balance sheet, because it can rebuild its balance sheet so quickly, adding 10 billion in cash this year, for example. 37.3% operating margin, 36.24% net margin. Both absolutely incredible numbers, exceptional for the industry and exceptional for any industry really, outstanding for any industry, particularly one that sells mostly hardware. 36 cents for every dollar in revenue goes straight into Nvidia's back pocket. Return on equity of 45% is again absolutely excellent, far higher than what I would deem average of around 10 to 20. That is an outstanding number. Return on assets, I'm normally happy with around 5 to 15%. Return on assets to 26.6% is absolutely superb. This is a company that has exceptionally strong profitability metrics that are only rising, and this is partly because of management's exceptional execution. I'm really happy with these numbers, and it gives it a lot of leeway as far as balance sheet is concerned, in my opinion. If a company is growing its revenue at 60% a year with 36% net margins, it's going to trade at a premium. And Nvidia absolutely does trade at a premium. Most of these profitability metrics here are obviously not cheap. Nvidia is still a company that's still in its ascendancy, really, despite being now $580 billion company. You should not treat it as a mature company, because it absolutely isn't one growing revenue at 60% a year. Looking at the price sales ratio, 22, that's a fairly rich valuation by normal company standards. Obviously, the one we're most interested in here, because Nvidia has regular earnings, is the price to earnings ratio. Price to earnings ratio of 60 and a forward P of 42 are both far above the S&P 500 averages, indicating that a lot of growth is priced in here and there's high expectations for the stock. Nvidia, however, is growing far above the average S&P 500 company, so this is somewhat justified. A PEG ratio of just 1.88 gives an idea of the earnings growth that is expected, especially when a P ratio of 60, with that sort of an earnings growth, you can see that there's going to be tremendous earnings growth expected. 1 is typically considered cheap, 1 to 2 is about fair value in my opinion, 1.88 represents decent value here. Not many of these metrics make Nvidia look a bargain, and they are unlikely to ever to. Nvidia is a very high quality company, growing at 60% revenue with tons of tailwinds, and it's not a hidden gem. People know about Nvidia. It's unlikely to trade. It's unlikely to look cheap, basically, in my opinion. It's grew revenue 60% in the most recent year at a huge scale. This business is really going to look cheap by conventional metrics, so it takes a bit more of a greater understanding of the business to figure out a proper valuation. So to do that requires a discounted cash flow calculation. So in this case, I'm using a 25% earnings per share growth rate. Use earnings per share here just because that's the metric that I prefer. 25% is actually fairly discounted to the 10-year average of 34.5% earnings per share growth, which is absolutely outstanding. The 5-year average is 31.7%, and the most recent year, 123%. I think 25% is a more conservative number, because at the back end of that 10-year estimate, years 8, 9, and 10, this a 25% growth a year, you're looking at really, really large numbers. That being said, they grew revenue 60% this year. The 10-year average is 20%. Revenue doesn't look to be slowing down anytime soon as they enter new markets. So I think if earnings per share could grow in line with revenue, it could be much, much higher than this, of course. But I think placing the earnings per share growth in line with the 5-year average revenue growth is about right, in my opinion. So that is 27.5%. So in this calculation, I use 25%. I used an 8% discount rate for the long-term returns of the stock market, and that gave a fair value of $229.44. Pretty much exactly fair value based on today's stock price, no significant discount. And again, this is a company that you would expect to be well priced by the market because it's a known quantity. Nvidia has tons of tailwinds, so I'm not expecting it to be tremendously cheap. But to get a company like this for fair value with all its tailwinds, with its incredible growth, I think that is really, really attractive. Just taking a deeper dive into the company's more recent news to get a grasp of where this company's going. Q4 fiscal summary gave some really very strong numbers. Revenue up 8% quarter over quarter and 53% year over year. Slight slowdown from the growth for the rest of the year over year, but still really strong. Gross margins have expanded strongly over the last year and remain high, around 65%. Net income doubled. There's absolutely nothing here that I can fault. This is an extremely impressive report, and the market was actually pretty lukewarm on this. These shares did pretty much nothing when it came out, and this shows the expectations that are required in Nvidia. So looking at the full year results, even more impressive. Revenue up 61%, so impressive at this scale. I really can't get that across to you enough. Now nearly just shy of 27 billion for the full year in revenue. 65% gross margin, which they're now maintaining. Really strong. Net income up to 125% on a GAAP basis. Everything here is superb, particularly at the scale, which again I can't stress to you enough. Nvidia is executing incredibly at this sort of scale in the midst of a global chip shortage. Just fantastic execution, real pat on the back from management for me. It's a company that continues to impress me every day. So the big news that was announced a week or so before the earnings was that the ARM deal fell through. Nvidia was going to pay 40 or so billion to buy ARM from SoftBank. Nvidia actually paid a write-off fee of 1.36 billion. Obviously, I'm not thrilled by this, but I felt for a long time that this deal was not going to make it past regulators. The 1.36 billion is essentially a goodwill charge because Nvidia requires ARM. They're in working close partnership. They require it for a lot of the projects. I think that's absolutely fine. 1.36 billion in the grand scheme of things. Wow, it's a lot of money. This is a nearly $600 billion company, so 1.36 billion is water under the bridge effectively. Doesn't affect my thesis at all, really. Would have been great to see the powerhouse formed by both companies, but both companies are going to thrive regardless. They have major long-term tailwinds, particularly Nvidia. Outlook for the next quarter, which they also released, remains really strong, predicting 8.1 billion in revenue, gross margins to maintain above 65%, which I'm really happy with. If this maintains, Nvidia will record more than $32 billion in revenue for the full year. Growth is really remaining so strong and no real signs of slowing down in the near term. I just wanted to include this last bit of news because I found it really interesting and a really nice demonstration of Nvidia's optionality. They recently formed a partnership with Jaguar and Rover, which may not be well known to US investors, but it's a big car company in the UK. There's a factory not far from where I live, and in many other countries it's a huge brand. As part of Jaguar Land Rover's new scheme, they're going to be maintaining a partnership with Nvidia for starting in 2025 to use AI-powered autonomous driving and connected services for all future vehicles, giving next-generation safety and digital services. This is just another example of the further applications that Nvidia's items are being used for. Automotive sector this time with new applications, further demonstration of Nvidia's incredible optionality. So in summary, Nvidia is a company that I've admired for a real long time. I just never really pulled the trigger for whatever reason. This most recent pullback, now 30% from its all-time highs. I'm quite happy for this to be my entry point. May decline some more from here in a tough market, but I'm happy to dollar cost average from here. I think it's rare to get a company of this quality for about fair value. I think this is essentially going to be a $1 trillion company in the next 2 to 3 years. It's in a tough market right now and it's still excelling. Has so many tailwinds, tons of optionality, rising moat. It's the clear market leader and has a strong history of innovation, and I love the management. It's perfectly positioned to benefit from all the tailwinds in cloud, the metaverse, gaming, so many more markets that it continues to grow into, like automotive, as I previously showed. This will be a $1 trillion company in the future. It will be a company that shapes many industries and has the potential to beat the market healthily for years to come. So I'll be a very happy Nvidia shareholder, and as I said, I'll be dollar cost averaging over the next few months, perhaps years if it remains at reasonable valuations. And with that, I'd ask you to like and subscribe the video if you're enjoying the content, and comment down below what you think of Nvidia, what you think it's going to do, and if you think it's cheap or expensive right now. Thanks, see you again.